Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from the TechnicalTraders.com. Welcome back to the show, Chris, and I hope the new year is doing great.
Yeah, thanks for having me, Jim, and Happy New Year to you. And yeah, great start to the year. It's going to be an exciting one for sure.
Gold, is it getting new interest, mainly, I guess, because of the trouble in the Middle East?
Yeah, gold, I mean, you and I have talked about this, and I've been pounding on the table really all year. Gold is still seen as the ultimate safe haven, and it continues to perform really well and outperforms gold miners. And gold broke into a bull market in 2019, a true bull market from a 6-8 year base that it was building. Gold miners have yet to break out of that multi-year base. They're close. But gold is the true safe haven. And I mean, when there's issues overseas, the whole globe starts to buy the safe haven, which is gold bullion. And that's why we're seeing it move higher. It's a lot harder for people in all kinds of random countries to buy, American mining stocks. So they just buy bullion in different ways, physical and futures, and they can, it's driving the price higher. So gold is by far the key safe haven, especially when missiles start flying. You can see it on the charts. Gold is just rocketing higher here. And, I think it's a little overdone, but I mean, I still think, long term, it's going to continue to go much higher.
Gold miners, are people renewing interest in them? There's definitely interest in the gold miners. I know it's on the verge. If we can break the high that we saw back in July this year, if we can see the gold miners break and hold above there, it's going to be off to the races. Right now, we've got some pretty interesting price action on the daily chart of the GDX and GDXJ, where it's trading at resistance. There's a huge amount of commercial short positions in the metals market, and the way that the market and these miners keep moving is, and the market makers love to do this, they can walk the price up in pre-market or post-market trading when there's very little volume, and then when the market opens up and everyone's piling in, they can unload shares, they can short the market, and they drive the price down. They've done it for 4 days straight, back to back, with big volume and a lot of selling. And the big thing is if gold miners can break that July high, there could be a massive short squeeze, meaning there's a record amount of short positions in precious metals right now. And if they start to break out and run, all those shorts are going to have to start covering and buying back positions. And that creates a feeding frenzy for shares. No one wants to sell the shares then who own them long because it's in a new bull market, and all these shorts are forced to pay a premium and drive the price higher. So miners haven't broken out yet, but there's the potential that they could have a massive scream or run to the upside over any time now. They're on the verge of breaking out today. So, is it hard for junior miners to break out because of shorting?
I'm not too sure the difference. I mean, I follow the juniors and the large caps like the GDX, and the charts are very similar in terms of their price action. I think it's a little harder to short some of those smaller stocks versus the big brand name stocks, because you can't short a lot of small and micro cap stocks. So, I'm not sure how it really affects it too much. I just know that, people are more speculative in the juniors, and once they start to run, I mean, they just take off and outperform everything else.
We'll have more with Chris Vermeulen right after this.
Cyprus Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cyprus Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cyprusdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Chris Vermeulen. Chris, natural gas you'd think would be a hot commodity in the cold months. Is it?
I think it's going to be. I mean, we had a couple really nice rallies earlier this year, but really since November we've been looking for a bottom in natural gas, and it's taking its sweet time to find a bottom and start to change direction. It hasn't done so yet, but it does have a really nice looking chart pattern that it's actually similar type of price action that we saw back in 2009 for the SP 500 when the huge bear market came to an end. This is like a mini one of those versions, and depending on how the rally out of this downtrend happens, it could signal a really significant move in natural gas. And you and I talked about this in our last talk last year, that natural gas has got the potential to go to 3 or 350. And this pattern that's building is starting to actually create more potential for that to happen. And it's a very bullish sign. I wouldn't be trying to pick a bottom just yet, but overall it's starting to set up and look primed and ready for a very significant run that once it starts, I think it's going to just pop and take off. And I think the move can happen a lot quicker than most people think.
Natural gas, is there an oversupply of it right now, and are storage facilities full?
Yeah, I mean, natural gas has been, there's so much of it, and that's been the big problem with it. It's just, all these oil rigs that pretty much produce natural gas, they're not even really going for it. It just produces so much that that's why the reason it's so cheap. There's so much supply. But the way the markets move is the natural gas market is, when it gets oversold, buyers jump in and drive the price up. If there's a big tropical heat wave, the market will sell off. And when there's a cold spell, the market rallies. It's really kind of a barometer of what's going on with weather. I find natural gas moves more on long-term forecasts of weather when there's big fronts moving in or out than really this whole supply and demand thing. So natural gas is, I don't look at the supply. I really just trade the price and the patterns, because really it's more about how people are seeing natural gas and the momentum behind it, not so much the fundamentals. I've never been into that side of the equation because it really doesn't mean much in terms of giving me insight on which direction price of a stock or commodity should go.
We'll have more with Chris Vermeulen right after the break.
Aven Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aven's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avenresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, with renewed tension in the Middle East, are oil prices scooting up because of that worry?
Yeah, they sure have. Oil, obviously the last time we had a type of bomb go off we saw crude oil spike and rally. And the interesting thing is we're right back at that same price, and the missiles are flying again at that same price. And we're seeing a blow-off top type of price action in crude, meaning prices blowing through resistance, huge volume, and now it's starting to reverse back down. And crude oil actually hit this price. This is the third time it's hit it in the last year, and each time it reached these levels, we saw about an 18% drop in crude, and both times it happened within about a 3.5, 4 week period. And so it's really interesting again that we're back at this level, missiles are flying, and more or less we're at resistance, and the charts are looking really bearish. Now they're still in a very strong uptrend. We need confirmation that it's reversing to the downside, and we need some type of short-term bearish pattern, like a bear flag or something like that, before we want to actually take advantage or try to take advantage of a falling market. But yeah, crude oil's got a really interesting chart, and I think a lot of people just got sucked in and got long in the last couple of sessions, and that's what it looks like in terms of volume. And usually the masses, when they pile in all at the same time, are pretty much the dead top of a market, and that's what I'm waiting for, some confirmation to see if we can play the downside of crude.
You mentioned before we went on air that the last time we saw that was when the Saudi oil plants were attacked. The prices really went up quickly, but then how much did they fall after that?
Yeah, well, we saw about an 18%, more than that. It was about a 19.5% drop from that move, and that's right where we're at again today. So I think there's a lot of potential, and I mean, you can throw some leveraged plays into here in terms of you could play or short the energy sector stocks, or ERY. There's a lot of different ways you could play this to add a lot of juice. So there's a lot of potential if the market does confirm a sell-off here and start to drop. So it's a really exciting pattern. On the flip side, though, if price can hold above $64, $64.50, and build a consolidation pattern maybe over a few weeks, trading sideways here, if it breaks out to the upside, there's going to be a very significant move where I think we would see potentially $70 a barrel to the upside. So it's at this really critical tipping point. At this point, I'm looking and hoping for a move down in crude to play, but if it builds a bullish pattern here, we could see a breakout to the upside and have some pretty equally good gains as there as well.
What do you see happening in bonds?
Well, yeah, bonds have been flagging out very much so like gold, multi-month consolidation, just slowly drifting sideways and lower. Bonds are just this week, actually yesterday, I just started to get early warning signs that the momentum is shifting on bonds. We're starting to break through some resistance levels, a falling trend line as well. It's at the 200-day moving average. So a lot of things are coming together. Cycles are coming together for a bottom. And what's interesting is this very short-term indicator that I have is starting to show bonds as a buy signal as of yesterday. And bonds typically move in reverse just before the stock market does. So I feel as though smart money has been accumulating bonds the last few sessions, and that momentum is shifting. And I think they're on the verge of moving up as a safe haven play. Really, gold's got all the attention as a safe haven play. Bonds have been kind of just like a stealth mode in the background. And I think they're going to be a really good play here, and they could do very well once the stock market actually starts to roll over. But at this point, the stock market's still moving higher. It's holding its ground. So there's not a lot of interest in the general public for bonds at this point. But as soon as stocks or the S&P 500 starts to fall, we're going to see everyone pile into bonds real quick. So this is kind of like the early heads up that big money is moving into bonds in a very kind of stealthy way right now.
Are we getting mixed messages from the equity markets right now?
There is. I mean, the markets always like to give off mixed messages, which is what makes it so difficult to trade. And the key is to stick with the trend. And right now, the trend is up. We are seeing increased volatility. We've got this early warning sign that money's moving into the risk-off assets like gold and bonds, miners, and really, you know, we got to stick with the trend. I do feel as though the equities market is on the verge of a fairly sharp pullback, but we're long equities right now. We're actually long gold miners as well. And we could be getting long bonds, and it's going to be interesting to see how all these things move very shortly. But at this point, you got to stick with the trend. Equities are trading higher, and until we close below the 200-day or the 20-day moving average on the SP 500, you got to remain kind of long at this point.
Chris, how would you sum up the situation right now?
Well, I mean, as a trader, short-term trader, I'd be looking to potentially put some money in the risk-off assets. I like bonds. It's a kind of a sleeper move. It's set up for a big rally if the equities market starts to roll over. I think risk is pretty low for bonds. It's at the 200-day. It's kind of oversold. I think a lot of the selling has already taken place. I really like precious metals. I think they're going to have a couple weeks of sideways consolidation, but I like natural gas. Natural gas and bonds seem to be the two that are primed and ready. Natural gas still needs more time. It has yet to have a momentum shift and give us any sign that it's starting to turn up yet. I think it could still make a bit of a lower low, but that is a good thing. I actually want one more lower low on the daily chart before it starts to reverse to hit a significant support level. So bonds, natural gas, seem to be kind of the plays for some potential new upside moves.
Chris, thank you so much for being on the show.
Hey, thanks for having me, Jim.
My guest has been Chris Vermeulen from thetechnicaltraders.com. If you have any questions for Chris or for anybody else on our show, you can send them to info@howstreet.com. Find us on Twitter @HowStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.